everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning 17th of October. We've got an exciting week ahead of us with 2 central bank meetings and the third and final U.S. presidential debate. There are a number of Chinese economic indicators on Wednesday, and there are important UK economic indicators throughout the week. That might give investors an excuse to buy back their sterling or to pummel the currency further. The ECB and Bank of Canada meetings are not expected to result in any change in rates. The market places a mere 7% chance of a cut in rates by the ECB, and the Bank of Canada is expected to keep rates steady for the next 2 years. For the ECB meeting, the focus will be on what clarification they can shed on reports that they may start to taper off their bond purchases before the quantitative easing, the QE program, ends next March. Personally, I expect them to extend their QE program, so I don't think this is an issue. But an absence of any comment on this could be construed as tacit assent to these reports, which might be positive for the euro. At their last meeting, the Bank of Canada said that risks to the profile for inflation have tilted somewhat to the downside, and that financial vulnerabilities associated with household imbalances continue to rise. This caused dollar Canada to pop up. This time, I'd expect them to be more optimistic, especially since oil prices are up over 10% since then. The Canadian dollar might therefore benefit after the meeting. The U.S. presidential debate, to be held Wednesday night in the U.S. or Thursday morning in Europe and Asia, will, in theory, cover 6 topics, but I expect the last topic on the agenda, fitness to be president, will get most of the attention. The polls predict that Clinton will win the presidency, so the focus has just switched to whether the Democrats can overturn the Republican majority in Congress. The debate is therefore still crucial for U.S. politics and the dollar. Now, China announces industrial production, retail sales, fixed asset investment, and the key GDP figure on Thursday. We saw last week with China's exports and CPI how their data can affect global risk appetite. GDP growth is forecast to remain at 6.7% year-on-year, which would be encouraging, and the other indicators are forecast to show modest acceleration. If so, that should be good for risk assets such as the Australian dollar and negative for the safe haven yen. The week sees a good number of U.S. indicators that should give us a better handle on the real economy. Industrial production today, the Empire State and Philly Fed indices, and the Beige Book. We'll get an inflation update and several bits of housing data too. Today's Empire State Index and industrial production are expected to rise, which could prove positive for the dollar today. Now, sterling was volatile last week even without any data, so having UK data almost every day this week may provide even more trading opportunities. We get CPI on Tuesday, employment data on Wednesday, retail sales on Thursday, and public sector borrowing on Friday. Looking at the forecast, a steady unemployment rate and solid retail sales may reassure investors that the economy hasn't yet fallen off a cliff and could bring back some buyers to sterling. Finally, tonight's New Zealand CPI will be important for that country. With the rate forecast to fall to 0.1% year-on-year from 0.4%, that might make a rate cut all the more likely. But with the market already expecting a cut at the November 10th meeting, it may be fully discounted in the market already. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.